what is that investing means? Is it like they're investing, or they're buying a stock, or they are becoming a partner? Obviously, I know the answer, but I want you to kind of share that. What does it mean to the the investors? I mean, is it backed up by something? That how safe is their investment? So to say.
Sure. So there's obviously many different ways to structure an investment, but I'll walk you through our investment structure from the legal side, from the economic side, and hopefully that will make a lot of sense. So starting with the legal, every deal we set up a new organizational chart with new LLCs, and the simple way to explain it is that investors are investing directly into the LLC that owns the property. So they don't necessarily own the property directly, but they own the LLC that is the sole owner of the property. And what they're essentially buying is a partnership interest. And what that's backed by is it's also a security, because we, as you know, we do a securities offering, an SEC exemption, which, that has disclosures and legal things like that to protect investors. So it's a partnership interest. It's a security that they're buying. And that puts them in an ownership position of the asset. Of course, debt comes first, and that's why debt is very important. It's something that we spend a lot of time thinking, analyzing, and making big decisions about the type of debt that we're using. But in the process, or in the deal structure, obviously first the debt is paid, and then after that we have cash flow that we're able to distribute to investors. And the way we set up what is called our waterfall, which is the partnership structure, is first we give investors, or we owe investors, an 8% preferred return, right? And preferred return is a pretty common term that you'll hear throughout these partnership structures, but they can all be structured a little bit differently. So our preferred return, like I said, it's 8% typically, and it's cumulative and compounding. So in a year, if let's say we only distribute 5% instead of 8, right? That's the thing I want to step back and make clear, because some people get confused when they hear 8% preferred return. They think, great, I'm getting 8% cash flow every month, but that isn't always the case, right? It's that you're owed the 8%. It's not a guarantee of the payment. So for example, if there's 5% in a year of cash flow, the 3% that you weren't paid as the investor will accumulate and roll over to the next period. And in our structure, it actually compounds. So the 3% that you don't receive actually earns 8% interest on itself. So it's a compounding calculation so that you actually get caught up over time. And then after we've caught up that 8% preferred return, then we return all capital back to investors. So really the way I like to explain it to investors is that they get their minimum return of 8% compounded and their original capital back. So now their risk is off the table. Once that happens, then we split the rest of the profits, 70% to the investor and 30% to us as the sponsor for our performance compensation, to ideally go above and beyond the 8%, which historically we're able to do. So that is, kind of from legal to partnership is how investors are investing with us.
So basically, if an investor is investing with you, he's not just buying a paper stock, which could get devalued to half in no time. Whatever happened in the last couple of weeks, that stock market went down. A lot of stocks lost 20, 30, 40% in value. What we are saying is when basically investors own part of the property in a very layman term, right? They are not buying a single family home, but a property is being bought in an LLC, and depending upon how much they are investing, they are buying part of that asset. So their investment is backed up by the real estate collateral in a way.
Yes, that's right.
That is right.